strategist at Wealth Mills Securities with us. Thank you so much for joining us today, Mr. Kranthi.
Thank you, Neha. Thanks for your invitation to share my views on the ET markets.
Well, it's my pleasure. So, for the audience joining us today, we will be talking about how one should approach all time highs in the market. So, to start with, Sensex hit a lifetime high of 63,588 during yesterday's trade. So, what was the market's reaction?
Yeah, Neha, time and again, Indian market has proven that, and it's a resilient and a resurgent market. Last year, if you see in past 3 4 quarters, market uh, was in a very choppy.
Yeah.
It was trying to sustain the level of 18,000, and whenever it comes down, the Nifty 18,000 below, and whenever the market correction of 10 15% from the peaks of the market, there was fear mongering that was going on in the market. Now today back, market shown its resilience. So it shows that the inherent strength of Indian markets, thanks to FPIs, they came back and they have been the net buyers in May. In the beginning of May, there was a saying on the markets: "Sell in May, go away." If somebody followed that one, they missed the best of the rally. So stay invested in Indian markets, and every dip that offers, it can be at any point of time in Indian markets. That's a very good opportunity for the investors to accumulate the stocks in India for a medium to long-term perspective.
Okay. So, Sensex hit a lifetime high, but Nifty was oscillating near its previous high. But if you talk about Nifty 500, Nifty small cap and mid cap, all of these scaled new highs yesterday. So, what are your thoughts on that? Is it bullish or is it just like a temporary?
Yeah. Last 1.5 year, Neha, there was a sluggishness in terms of most in mid-cap stocks. The activity is oscillating between the large cap and the mid-cap, and even in fact, the small cap was completely, they were, I can say, they are in a downtrend. So what we can see is whenever the indices, the main indices of the market, it can be Sensex and Nifty. Whenever it goes on to the top, there will be a catch-up rally in mid and small cap stocks. So that's what we witnessed in the past few months. There is a catch-up rally. That's the rally in mid and small cap stocks. Uh, and always what happens is the mid and small caps join the party late, but the sustainability is quite important. And also, as we pursue the mid and small cap, always high beta, so they tend to give higher returns. And when the market, any kind of knee-jerk reaction that comes in the market, and there is a fear mongering in the market, those are the first one to correct more. So that's the reason whenever an investor is investing in mid and small cap stocks, they need to have the conviction, they need to understand the business model clearly, and how the geopolitical and the different aspects of the parameters of the market that are going to influence that particular stock is extremely crucial when investors are investing in mid cap and small cap stocks. So overall, there is strength in the mid and small cap stocks. It's more about stock specific rather than going through the Nifty 500 indices.
Okay, okay. So the last time Sensex hit an all-time high was on December 1st last year. So FMCG, realty, auto, and capital goods, along with PSU stocks, are some of the sector and stocks that have given double-digit return in this span of time. Do you think this will sustain for these sectors?
Yeah, the stocks what you mentioned, like the sectors like autos and the other sectors,
FMCG, realty.
FMCG, the stocks were on a sluggish mode in the past 7 8 quarters. Even in fact for the autos, once there is a rebound in the economy, once there is a rebound in the market, these stocks tend to give higher returns. And one thing we need to take into consideration there, during this phase, the one interesting thing happened. uh, the interest rate sensitives autos are perceived as. When the interest rate curve in India is going up, the auto stocks outperformed in India, which is a paradoxical thing. And today also, if you see many interesting are the favorite models in autos. If you want to delivery, the waiting period is so much high. That shows the inherent strength in the economy and the the growing middle class, which is the key strength for Indian economy and the market, that completely resemble right now. So what we can pursue going ahead is the outperformance what we witnessed in the sectors you mentioned. It can be sustainable on a medium to long term basis.
Okay. And which sectors are you bullish on going forward from here, from this point?
Neha, in your previous shows also we discussed about the defense as a sector, uh, and
Yeah.
defense
Yeah.
sector has emerged as a new age sector in India because of the earning visibility and also the interesting themes that are taking place in defense. So defense can be a interesting sector one need to keep in on their radar, and any dip in these stocks, of course, stock valuations look stretched right now. If there is any dip, any opportunity that comes in the defense space, definitely investors can chip in. And the most ignored sector right now is the large cap IT. If you see
Yeah.
the longer term horizon, okay, last 50, 10, 15 years horizon, IT stocks have been the outperformers. So if investor have a pretty long term horizon, uh, definitely in a staggered manner, they can accumulate the large cap IT stocks also. This is a contrarian view, but contrarian view do pays to the investors in a longer term perspective. So one need to take the stocks like IT large cap stocks in their portfolio in a staggered manner. Of course, the banking and financial services remains the favorite sector always. So there are some kind of large cap names in banking and financial services. The large cap banks, like just to name HDFC Bank, one can keep on their radar for a longer term perspective.
All right. So, moving on, as we're talking about all-time highs, how should investors look at all-time highs?
Yeah. Uh, the all-time high is just a number, and it's a number to ponder in the markets, Neha, and it gives much excitement for the investors. But investors need to always consider any dip that comes in the market. Okay, that always some consolidation that happens always in the market. It is inevitable at some point of time. So investors need to use these dips to accumulate the chip to create wealth over a period of time. So right now, market can spend some kind of time in terms of the consolidation. Uh, the global cues are quite supportive. The European markets and also the US markets are quite supportive right now. And the FPIs have turned as a net buyers during the month of May, and in the month of June also, FPIs have been continuous buyers in Indian markets. So all these factors have been helping the markets and helping the indices to sustain in these levels.
All right. So, next I want to talk about global markets and US. Fed Chair Powell's testimony was well awaited and it was out. So, can we discuss a little bit on that and what can we expect further and how will it affect different markets, including US and India?
Neha, there is a great saying: "Don't fight with the Fed." So Fed will come up with a different kind of commentaries, and if I have to analyze the Fed commentary, a year back, Fed has been discussing about the inflation environment is transitory. So they are not bothered to increase the interest rates, and for a prolonged point of time, they kept the interest rates at zero and negative. And later on, what Fed has conceived is no, inflation is not transitory, inflation is sticky, so we need to control inflation. And not considering any kind of unintended consequences onto the radar, the Fed all of a sudden from zero to they increased at a rapid pace past 7 8 months. They have been increasing the interest rates, and right now they are targeting the inflation. If you track, anyone tracks Jerome Powell's speech and his commentary and the minutes, they want to attack and bring down the inflation, the real inflation, to 2%. So don't fight with the Fed, but just observe the what Fed is doing. That's extremely crucial for any investor who are there in the equity market. So the Fed is when on the other hand, people who are expecting we reach the peak of the interest rate cycle, we can expect some kind of reversal of the Fed action. Now Federal Reserve has been telling, no, it's not enough. We've taken a pause. We are going to have further 2 more rate hikes. So that is the condition right now we are in. But some point of time, because of the proximity and because of the influence of the Federal Reserve, every central bank has to follow them at suit. That's the reason I always say don't fight with Fed. So, but the Indian Central Bank, led by Governor Shaktikanta Das, we are much efficient, much forward-looking, and we have a brighter vision towards how to balance the growth and inflation. So, the Reserve Bank of India had taken 2 pause. They given a pause to the interest rate cycle, but we never had any sort of negative interest rate or zero interest rate policies in Indian monetary system. So we are much insulated. We are much safer note. Of course, the Fed actions has to be considered by every central bank across the globe, but we are on much safe hands in India when you have to compare with the Western economies or the actions of the Federal Reserve. So we need to see how the numbers that are going to come up in the next coming quarters. So Federal Reserve action we can see. Overall, the one thing is U.S. economy is going at a stronger pace, and the world economy is growing at a stronger note despite of the inflationary and recessionary worries, and also the trade gaps that happened because of the geopolitical situation between Russia and the Ukraine war, the unintended consequences and supply bottlenecks that increased the energy prices across the nations. Right now, one thing is clearly evident is the economies are quite strong and they are resilient. The growth is coming back in the economies. So we need to wait and watch how the Fed action is going to be. Tomorrow, next commentary, Jerome Powell can turn and says inflation is under control, because the last commentary, what Jerome Powell have told clearly is the forecasters and the analysts at the Fed, they could not able to gauge the inflation rates clearly. So this is the commentary that came in the earlier commentary of Federal Reserve. So we need to see how the things are going to pan out for a period of time while determining the Federal Reserve interest rate policy.
Absolutely. So before we conclude our segment for today, I'm going to take some questions from the audience. So the first one I'm going to take is by Rashmi. She's asking, will Nifty cross 20,000 this year?
This has been there on their cards. Okay, we need to see how the global environment is going to be. Okay, one need to be stock specific rather than index specific. So there are all possibilities. Okay, we are at 18,500 levels at this point of time, and 1,500 points on Nifty can be possible during this year.
Yeah, I think I was reading a report yesterday only, and it was related to all-time highs, and I saw that Goldman Sachs sees the index at 20,000 for this year. So could be a possibility, but let's hope that it happens.
Neha,
And
just to mention, during past year, the global research houses used to give the targets. Okay, and over a period of time, they stopped the targets, because whenever they give a conservative target, Nifty has been outperforming. Whenever they are giving a very bullish targets, there are corrections and bumps that's coming back on the market. So it is one need to think about what is the time we are going to spend in the market, and what kind of stock selection we are doing. These are the utmost important things for the investors rather than keeping the entire market as a whole. Yeah. If the Nifty is going to the all-time highs, the indices is shooting skyrocketed. But what kind of stocks we are in, that is extremely crucial than
Yeah,
tracking about the indices always.
absolutely right. So, another question is by this user who's asking me, what about Hindalco, JP Associate, Idea
Yeah.
stocks? I think specific
Yeah.
stocks here.
These are not the stock recommendations. I'm just sharing the opinion about these stocks. Right now, the metal stocks are cyclical in nature. Stocks like Hindalco, they're in the beginning of the cycle. Okay, just 7 8 quarters back, we were discussing about the super cycle in the metal. Okay, which has not taken off. So the sustainability of global growth is extremely crucial for the stocks like Hindalco. But for a longer term perspective for investor, one can take the entry into these kind of stocks when the bottom of the cycle. One can look forward investing. Idea coming, okay, it is whenever there is the VI, the new name of the idea. Uh, Whenever there are market tends to be on a higher note, these are the kind of stocks that comes on the investor radar. So only I don't think so. There are tremendous positive impact that's happening in this company. The number of course, I do carry a idea Vodafone number. Okay, it doesn't mean I'm quite optimistic about this company. The ARPU of the company is coming down, and the new editions have been coming down. So there is not much significant action is missing in terms of the business growth is concerned. The one thing is recently the good positive thing that happened for this company is the promoters have infused some capital into the company, which given some kind of oxygen for this company to survive some point of time for some more time. So it should we need to wait for the positive action how the business is improving in this company. That's crucial to take any kind of serious investments in this company. Otherwise, it can be a trading bet in the medium to short term.
All right. Dilip is asking, can you suggest some stocks for short term in auto sector?
Yeah, auto sector stocks have been outperforming. Okay, I'm not we- aware about what is his risk appetite and what kind of horizon he have, but definitely you can look for investing in stocks like Mahindra, Maruti, and Tata Motors in the medium to long term perspective.
Okay, okay. We're going to take one or two questions more and then we'll wind up. So, Shikha is asking, hello, sir, how should we look at corrections in the market?
Definitely, corrections are a very good opportunity, and don't leave any correction, any serious correction that gives an opportunity in the market. One can accumulate for a longer term basis. Time and again, Indian markets have proven they are resilient and resurgent markets. So, definitely, any correction that comes, it gives an opportunity, but during correction, you need to have conviction to buy.
Okay. So, another user is asking about IDFC first. CLSA has downgraded from buy to underperform. As a long term investor, should I hold? Average is 68 or book profits?
See, definitely, if the investor is a longer term investor, there are positive things are that taking place in this bank. The buying interest is coming back from retail and as well as institutional investors. Uh, and IDFC has been expanding in terms of their branch network and increasing their CASA and the loan book. So
Hmm.
if the investor is a longer term perspective, definitely they can hold on. There might be short term blips here and there, but they need not have to worry about the short term blips. If the investor is for a longer term, they can stay invested. If at all it's a trading position, uh, uh, because of the markets, they can take some profit from the table, but for a longer term horizon, one can hold on to the stock.
All right. We'll just take one last question. Harish is asking any potential stock which you think can become multi-bagger.
The multi-bagger stocks are always comes up with inherent risks. So one need to do their own study, and we need to know the life cycle of the investor, and also what is his risk appetite, and also the time horizon. These are the crucial things one need to taken into consideration. But nobody can tell in a public domain or in an open thing the multi-baggers.
All right. Okay. So, well, we with that we have reached the end of our segment today. Thank you so much, Mr. Kranti, for answering all the questions and talking about all-time highs on this ET Markets live stream today.
And Neha, just to conclude, all these multi-baggers comes up with a multi-mega risk. So one need to
Oh,
also consider all these things before taking any
yeah.
serious investment decisions.
Definitely, definitely. Thank you so much for joining us today on ET Markets live stream, Mr. Kranti.
Thank you, Neha. Always my pleasure to share my views with the viewers of ET Markets. Thank you.
Thank you so much.